So I'll go to Coinbase, place the buy order and invest $750 because I'm investing in 4 different stocks. So I'll place the equal amount. So I place the trade and done. Hi everyone, welcome to today's video. So today we are going to have an honest conversation about investing in US stocks. And I'm actually going to invest my own $3,000 into 4 tech US stocks. Now you would say, I can hear a lot of clicking noises. They would say that, hey, I know what these 4 tech stocks are. You are going to invest in Google, Facebook, Amazon, Netflix, all this. No. So none of these stocks. I'm not going to invest in any of the FAANG stocks. FAANG means Facebook, Amazon, Apple, Netflix, Google and Microsoft. So I'm not going to invest in any of these 6 stocks. I will explain you the reason why as well. Please listen to it. Very important. Now, many of you would say that, hey, Akshat, you know what? I am getting bored. I am an Indian stock investor. I don't care about US stock market. You should care because there is a lot of congruence between the Indian stock market and the US stock markets. So if you keep a track, I'm not saying that you should invest, but if you keep a track of the US stock market, you will get cues when to pull out your money from the Indian stock market or invest more money in the Indian stock market. I did a separate video, you can check it out. But today we are going to take a look at 4 US stocks that I'm investing my money in. I'm going to explain you the rationale of investing in the US stocks. So please stay tuned till the end of the video. Now, very quick disclaimer. Number 1, not an investment advice. Number 2, which app am I using? I am using IND Money. I like the interface. It was clean, easy to understand, intuitive. Had very easy time buying the stocks, transferring money. So I loved it from that angle. Now, if you have other recommendations, please put it in the comments. I will go check it out. Now, here is a look at my bank statement. I transferred $3,000 to my IND Money trading account. And these were different charges that I paid. These were mostly bank charges. So you can look at SGST, CGST and the commissions that I had paid to the bank. You can use any app that you like. The objective is to understand US stock market investing. So let me start the discussion. And there are 3 major points that I'll speak on this video. So number 1 point is that I'm going to explain it to you that why am I investing in US tech stocks, but why not in major US tech stocks like Apple, Amazon, Facebook, all these big name companies that everyone is investing their money in. So okay, so let me address this point. So my objective in terms of investing in the US economy or US stock is fairly simple, that I am trying to find out global monopolies. Not existing global monopolies. If I ask you that, hey, name like 3 tech monopolies in the world, you will say something like Google is there, Apple is there, Amazon is there. So these are probably somewhat monopolies with very big market share and they are leaders in their own space. And you are right, but these are monopolies already. They are already trading at a very high price. So there is no point in me getting into that race again and investing my hard-earned money at such high valuations. I'll explain this point further, but I hope this message is clear that I am looking to find out the next global monopolies. So for that, where would I have to go? I can't do that in India. I will have to move to the US to figure out those tech monopolies. So please keep the nationalistic pride aside. Let's be practical. That right now, the way Indian tech market works, we are not disruptors. So if we do an honest assessment of technology companies in India, we would all acknowledge, now I'll not take names here, basically we will all acknowledge the fact that the tech companies in India mostly do back-end tech. Right? They are not doing revolutionary tech, something building like Google Maps, the Google is doing, or they are doing like market domination across the world. That is hardly happening, right? So if you have to find a monopoly, where would you put your money? So I am putting my money in the US because that is where many disruptive companies are coming up, which can become the next tech monopolies like Google, Apple, Amazon. So that is my objective of investing in the US tech market, that I am essentially looking to do what? I am looking to identify global monopolies. These are growing tech companies in the US where I am going to put my money. Now let's move on to the second part and let me explain why am I not betting on big FAANG stocks and Microsoft. So let me explain this by covering and breaking down the analysis of S&P 500. Now you would say that, hey, what is S&P 500 exactly? So S&P 500, it's essentially index in the US for top 500 US stock companies, right? So for example, in India, we have what? We have Nifty 50, right? So if you are looking at Nifty 50, what does that mean? We are looking at top 50 companies in India. If you are looking at S&P 500, what are we looking at? We are looking at top 500 companies by market cap in the US economy. So if we are breaking down S&P 500, you will understand, hey, these are like 500 stocks that make up this S&P 500. Right now, if I show you the chart for S&P 500, you will see that in 1 year, it has gone approximately from $3,400 to $4,500. So it is a big jump of approximately 25-30% in the S&P 500. Now what is happening is that this entire index seems to be overvalued. Now you would say that, hey, same situation is playing out in India, so how is India different? I have done a video yesterday, so please watch it here. You will understand the difference between index investing in India versus the US. The answer lies in inflation. So please watch that video, very, very important video. Otherwise, this particular concept is going to confuse you. So back to our story. S&P 500 has moved quite a lot, because this is a liquidity driven rally. Right now, if you don't understand this term, please watch my video from yesterday. Very important video. Only then you will understand this core concept. So S&P 500 has moved up, and you would see that some big investors, for example, if I show you the portfolio of Ray Dalio, who runs Bridgewater Associates Holding, you will see that he has cut down his S&P 500 position by 37% recently, and 37% is not a small amount. So what does this indicate about S&P 500? It indicates that, hey, there are 500 stocks that are making S&P 500, right? Now, many of these stocks are overvalued, right? Overvalued. Now, if I ask you that, hey, which of these stocks would be overvalued or are likely to be overvalued? The answer lies FAANG stocks, and I'll tell you why, right? Now here you can check the weight of top 10 S&P 500 stocks, and if you scroll through it, for example, Apple has an index weight of 6.2%, Microsoft 5.9, Amazon 3.9, Facebook 2.4, Alphabet 2.3. If you take the weight of top 5 US stocks in the S&P 500 from a weight perspective, it comes out to be 20%. So just 5 stocks make 20% of the index. It is huge. Since there has been a huge run up in S&P 500, these 5 stocks have also moved massively. So this is the reason why I am not investing in S&P 500 heavyweight tech stocks. Now this was a very, very important concept for me to cover, because the first time when you are looking to make investment in the US tech market or US stock market, all of us tend to make investment in tech and we end up buying what type of stocks? FAANG stocks. So I'm not doing it. This is my strategy. I might be wrong, but this is what I feel, that I'm not going to buy this. Then your question would be that, okay, great Akshat, awesome. Which stocks are you actually looking to buy and why? Can you explain the rationale first and then talk about the stocks? So I'm very happy to do it. Now this is the same rationale that investors like Cathie Wood are also propagating. So the rationale goes something like this. So they believe that heavyweights in the US, right? For example, all the FAANG stocks, they will be disrupted, right? They will be disrupted by other tech companies to a certain degree, right? Now, this is a fundamental DNA of tech, that tech gets disrupted quite often. These companies, whichever companies I've been talking about so far, they've already grown big. Now their growth rate will not be that massive. So let me prove that point to you first, then I'll come back to this argument. So let us take a quick look at Microsoft. Now this is the Microsoft share. Now what you would see is that Microsoft was trading at approximately $184 just before the crash pandemic, right? Now it is trading at approximately $299, right? The stock price has doubled. And we are not talking about a mid-cap or a small-cap company. Microsoft's profit are much more than HDFC Bank's total revenues, right? So it's a huge company. It is a massive company. It is a leader and it is doubling its stock price like a mid-cap or a small-cap stock. So from this point, if we are sitting at $300, in the next 5 years, will this become 600? I highly doubt it. I don't mean to say that Microsoft is a bad company. It is a great company. But the price at which it is available right now, the risk-reward equation, the risk seems high. That is the reason why I am not too bullish on these major tech. But if there are companies in the US that we are able to identify, which will be next leaders in their own respective space, they will exhibit a similar type of growth. It will be easier for them to go from, let's say, $50 to $100 or $150 in the next 5 years. That is what we are betting on, and that is what we should be betting on. So just to explain the rationale of investors like Cathie Wood, what they are saying is that, hey, if you look at S&P 500, there are major companies. For example, there is Ford Motors, right? Now, companies like Uber, they have the potential of disrupting Ford Motors. So in the US, the next leg of growth will be driven by what type of companies? By disruptive companies, right? So this is the reason why we should pick up companies that are disruptive in nature and which can grow from X to 5X in the next 5 years. So do let me know in the comment section if you agree with this logic, that if companies like Uber or Airbnb or similar companies which are advancing in their own niche space in technology, will they become 3X, 4X, 5X, or do you feel that companies like Amazon or Apple will continue to grow at 2X, 3X the speed that they are growing now? So I will take bet A, right? So that is what I truly believe in, and that is the reason why I am investing $750. This is the first stock that I am buying in a company called as Coinbase. So I'm going to invest $3,000 in total. First, I'm going to buy a Coinbase. So I'll go to Coinbase, place the buy order, and invest $750 because I'm investing in 4 different stocks. So I'll place the equal amount. So I place the trade and done. So why am I investing in Coinbase? And many of you might not be aware of Coinbase. So Coinbase is a cryptocurrency exchange platform. It is one of the world's biggest cryptocurrency exchange platform. If you don't believe in the crypto narrative, it's fine. No one is pushing you to believe in it. But at least understand that a lot of other people are believing in this narrative. For example, I am not a big believer in luxury cars, but I still track the automobile market as an investor. Similarly, even if you're not a big believer in bitcoins and cryptocurrencies, it's fine. Track how people are behaving about it. You can invest your USD or INR in a company like Coinbase, and if you feel that, hey, the crypto market will grow in size, then companies like Coinbase will grow with it. So Coinbase is a cryptocurrency exchange, and if the crypto market grows, Coinbase will grow with it. Now, if you take a look at Coinbase, it recently got IPO'd. So in April, 14th April is when it got listed at $328. The price has over time stabilized. Now it's trading at $267. So you're not going and investing your money in Coinbase on day one. You're buying it now when price has somewhat stabilized over time. And this is despite the fact that in the last 1.5 to 2 months, the crypto market has actually gone up. So I feel that this stock is going to go up. Why? So let's look at some financials also. And when you are looking at US charts and graphs, some financial data is present from right to left, not the other way around. So start reading it from right to left. Okay. So here you would see that, hey, what is the operating revenue? So revenues have gone up, right? It was at 179, then it somewhat stabilized. These are quarterly results, by the way. Gross profits have been up over the last few quarters. So it's a growing company. It's a new company, not a lot of financial data around it. But overall, the picture that we have seen so far seems to be good. Now, let me take you to the final number, which shows the overall net income. So now you can see that the overall net income has bounced from 31 or 32 million to over 1.6 billion. Now this is huge jump in net profits, and that is not getting reflected in the stock price as of now. Now this is a good stock to buy according to me. Now why am I saying it? Now of course, due to the recency of the company, we can't look into the financials a lot, but we can do some solid analysis here in terms of the business overall viewpoint. Now, if you actually take a look at some of the products, if you go on Wikipedia and look at some of the products that Coinbase offers, then you will notice something very interesting. That of course, people engage, retail traders engage in cryptocurrency related products. Even institutional traders are engaging with the platform. There are other crypto related products. For example, if you have to store your cryptocurrency, you have to get into the wallet game, right? So I'll not bore you here with the crypto analysis. But the bottom line is that crypto exchanges can also launch a bunch of their products. They already have existing users and they can amplify their revenues by a lot. For example, again, I explained you this P and Q scenario earlier. P means price and Q means quantity. Now let's say that if 100 users are using Coinbase right now, hypothetically, and they are using, let's just say, one product for Coinbase. Now, even if new users do not get acquired, right? Now, what will happen is that the crypto market is anyways growing, right? So this Q is anyways going to go up with time. And this number is also going to go up. So it becomes massive, right? So for example, if this becomes 500 and if they are able to launch 5 products, their profit margin will grow exponentially. There will be massive PE expansion of this company. Now you would say that, Akshat, can you just explain a little bit more that this company, crypto market, I understand it might grow, they are launching new products, but don't you think there are too many like crypto players and crypto exchanges now? What about that? Would they not take away the market share from Coinbase? Good question, and this is what you need to see. So here are top cryptocurrency spot exchanges. There's Binance, and you will see volume and you will go crazy that, hey, this volume looks like crazy, right? And you will go Coinbase, which is second, but there is a huge difference in volume. So first and foremost, don't look at the volume because Binance has 383 coins and Coinbase has 98, right? So there are all types of Doge coins and whatnot. So you don't need to worry about that. Just look at weekly visits. Okay, that's point 1. Point 2, you need to understand the difference between Binance and Coinbase. Now, there was a great article which helped you understand the difference between Binance and Coinbase. Now, essentially, to cut the long story short, Coinbase is type of a platform which is much more useful for new investors in cryptocurrency because of its user friendliness. So that is one. Second is that Coinbase is a US centric platform and US is a massively growing crypto market. Coinbase is present outside the US. It is not able to gain a lot of traction in the US yet. So by far, Coinbase is a bigger player in the US in the crypto domain and it is likely to dominate it. Now here is a quick chart that you can take a look at about Binance and that will help you understand a little bit more. But to cut the long story short, if you do a quick analysis, if you take a look at top crypto platforms, you will realize that Coinbase exchange is one of the biggest platforms in the US and it is actually very user friendly. It has IPO'd recently, so it will pour that money to fuel the growth also. So this is one part of the equation. Now you would say that, okay, some new platform might also come up. They will take like insane amount of share. No, it is not that easy. What happens in the crypto market is that there is something called as hockey stick curve, right? So let me explain that, how adoption in tech works. So essentially what happens is that initially when companies launch their products, there is something like this, right? That they will acquire users at a very slow rate, right? And then eventually what will happen is that there is like this J curve, right? So essentially this is hockey stick, that after a point, a platform or a technology or an idea in tech, it finds its product market fit, right? And they get a lot of users, right? So this is called as the threshold, so to say, right? After this, the company becomes profitable, good things happen. Let me explain this by giving you the example of Facebook versus Orkut, right? How many of you have used Orkut? Let me know in the comment box. If you are my age, you would have used Orkut. So Orkut was very similar to Facebook. In fact, I personally liked Orkut more when I started engaging on social platforms. But what happened was that since my friends were moving to Facebook, everyone was using Facebook, people started migrating from Orkut to Facebook. Now, because of the fact that Facebook had many users, then there was a very high switching cost, right? That all your friends had to switch to some other platform. Only then you can message them and engage with them. That is how social media worked. The same is the story with Instagram, right? That anyone can copy the codes of Instagram, the design codes of Instagram and create like a replica of Instagram too, right? More poorer version of Instagram. They might even make it appear better. But will people migrate from Instagram to this Instagram 2.0? No, because there is already a network of users on Instagram. So a company like Coinbase is already winning in this race and therefore I have invested $750 in it. Now there is another interesting question that you might ask here that, hey Akshat, you know what? You said that you're not going to invest in Apple, Google, Microsoft, all these big tech players. Can't they start their own cryptocurrency exchanges? Why can't they do it? Actually, they can and they might also start their own cryptocurrency exchanges. But what these big companies do is that they go and merge or acquire newer players. So there is a likely scenario at some stage, not now, but maybe at some stage in the future, that a major tech player might go and try to acquire a company like Coinbase. This is one half of the equation about a company like Coinbase. The second half of the equation is smart contracts and NFTs. If we move towards a newer world where there is mass acceptance of NFTs, smart contracts, dApps, these are all new age technologies and we are moving towards tech because one thing is constant, right? That tech always evolves. It's not as if that the car that you were using in 1950, it hasn't evolved. It has evolved. Similarly, the tech that you are using right now, it will evolve. There is just no doubt about that. So therefore, you need to pick your bet in terms of technology, where the world is going, which technologies you are betting on. So I am betting on blockchain. So I do believe that cryptocurrencies are the future. So therefore, I am investing $750 in a company like Coinbase. So to summarize this video, now you'll say that, hey Akshat, you did not show the other 3 stocks. I'm going to show you the next time. Otherwise, the video would have become extremely lengthy. I'm going to do detailed analysis of 3 more stocks of the companies that I'm investing in, and I will show you the live investment again. So just to summarize, I'm not investing in major tech. I'm investing in disruptive tech. I'm betting on certain technologies and big players within that technology. So therefore, the first stock that I'm buying is Coinbase because I believe in the crypto space and the blockchain space. And I believe that Coinbase can actually become a monopoly, especially in the US, when it comes to crypto exchanges. So I hope you enjoyed the video. So give it a thumbs up and I will see you the next time.